Regional bank stocks staging a bit of a comeback this following what was a very difficult day yesterday. Let's bring in our own Leslie Picker to sort of discuss what we're seeing and why we're seeing it.
The why is the big question mark here, David. But you're right. There is a bit of relief for regionals this morning after yesterday's biggest slump since mid-March. PacWest, which led the industry to the downside yesterday, seeing the biggest gains of the group today. Like we said, the recent moves appear to lack a clear catalyst, which has industry watchers focused on short interest and other technical factors at play here. Short interest as a percentage of shares outstanding in the SPDR S&P Regional Banking ETF have jumped to more than 95%, up from 79% a week ago, when accounting for the synthetic long bets created in each short sale. That's noteworthy for ETFs in particular. That figure drops to about 50%, although still 7 percentage points higher than last Tuesday. Goldman saying in a note to clients yesterday that the initial selling was indeed experienced by those hedge funds due to short pressure, but other types of investors quickly jumped into the selling frenzy as well as those individual names began to fall, and that created a spiral from there. Now, from a fundamental standpoint, Bank of America saying in research this morning that skittishness over deposits, insured deposits versus uninsured, and profitability challenges, both pressuring names this morning, as is yesterday, as is regulatory uncertainty and credit concerns amid a late cycle mindset. So all of those kind of fundamental aspects weighing on investors' minds as we saw the sell-off yesterday, getting a bit of a bounce this morning, guys.
So, Leslie, name some names for us. Who are we watching? Who's most vulnerable looking at some of the fundamentals? Because now, I was reading notes last night where everyone's going through commercial real estate exposure and share of uninsured deposits and unrealized losses, all the things we did for SVB and First Republic. Who are you watching?
Yeah, in talking to analysts and investors, those are some of the key issues that they're looking at. The AOCI marks as well, just kind of where their securities on their balance sheet stand, how much of those are underwater. Also a key tenet here. I mean, the biggest losses that we saw yesterday were exhibited by some of the West Coast firms. PacWest, Western Alliance did see some significant moves to the downside. Now, they're not the ones. There isn't a direct correlation. We broke this out in a spreadsheet yesterday. They're not the ones necessarily with the largest proportion of uninsured deposits. That data, though, is a little bit stale. Some of the banks do report that once a year to a group within the FDIC, to regulators. And so we don't have the exact amount of uninsured deposits. You kind of have to play a little bit of guessing, maybe use some alternative data to figure that out in terms of, how that all has transpired since March, since that data is kind of backward looking. Also, commercial real estate exposure is a key point of this as well, as you mentioned, Sarah.
Leslie, thank you. Leslie Picker.